So focus of this, and I will send this out, is about trying to get you thinking of risk to the positive. People tend to think of investing and savings and stuff of risk as in a negative thing. I'm going to try and portray it as looking at the positive side, and potentially getting you to think a bit more about what you're not doing rather than potentially just avoiding. So, are you concerned about investing? Clearly, audiences vary. Everyone's got their own views, but if you're concerned about investing, then are you also concerned about not having enough money in the future? As I mentioned earlier, that client I've got who sat in cash for far too long, was in long-term fixed ISAs and that sort of stuff. And, I don't know if at 1.1%, that was probably a few weeks ago. It may well have dropped since, but it's like worth 10.5 grand after 5 years. So £500 to keep your money locked away is just ridiculous. And I know, I'm sure most of you are well aware of interest rates at the moment and where they are. Who knows where they're going? But CPIH, which is the inflation measure, including housing, was last at 1.6. It's probably going to go up again, and it maybe come down, but nonetheless, you're effectively losing money. So this little graph, the blue line, I guess, is the one to highlight. That is going in the wrong direction, effectively, i.e. your money is worth less. Again, might be preaching to converted, but it's always worth remembering that holding too much cash, whilst might be nice for sanity, maybe you might like being able to cuddle your cash if you got it under the mattress, which I hope you haven't, but it's not doing you any favors.
Quick question, Neil, what's LHS and RHS? What do they mean?
Left-hand side, right-hand side.
Oh, sorry. I thought it was some financial term.
It's not something I've made up. It's simple. Right. Fair question. But thinking again back to this, the whole point of risk. How long will you live? We don't know. No one knows. But the probabilities of reaching 80 and 90, which is the left hand is 80, right hand 90, the probabilities are pretty high. This is if someone was age 65 today, and if you're in a couple, the probability is in the blue section. So again, it's really quite high, the chance of reaching later life. So if you're just sat on cash and hoping that it'll last, how long will it last? Who knows? How long will you need it to last? Who knows? But I think people will probably tend to think they don't need as much money as they probably do, and they won't live as long as they probably will. So life expectancy is probably plateaued somewhat, perhaps, and COVID aside, I'll leave that as a complete aside, then it's still the fact that people are living a long time. So you do need money. So the power of time, again, the positive side of taking some risk. So these are not big amounts of money in terms of £5,000 to most people. To some, it is a lot of money, a grant, but nonetheless, it's not a big amount of money in your lifetime savings. But if you did start with just that 5,000 and had it invested, basically the graphs are going the right way. If I haven't got a cash line in here, but effectively it'd just be doing not a lot. Obviously, interest rates will go up at some point because they kind of have to one day. But I dare say people are starting to forget what something of an interest rate above even like 1%. It's certainly, I'm going through obviously buying a house, and mortgage rates are fantastically low. And I suspect people are in that mindset. So it doesn't mean taking excessive risk, though. This doesn't mean, we're not banking on Bitcoin or whatever, or just on red. This is sensible, inverted commas, just taking some sensible risk and investing in this case on the right, the FTSE share index over a period of time. So risk, what is risk? Everyone has a capacity for risk. So what can you afford to lose? Everyone's got an appetite, what they think about risk, and a requirement is really about what you really should be taking effectively to get going with your money. I've briefly touched on inflation a bit, but the left-hand side effectively is what the Bank of England sort of think might happen. Basically, they don't know because no one really knows. But the red, dark red band is effectively where they think it will probably go, and that's where they want it to go. So in that case, they're not going to probably do too much with interest rates for some time, on the basis that inflation will naturally, in theory, come back to where they kind of want it to be. And interest rates always grab headlines, always have. certainly in my sort of time, and they just get massive reaction. The current kind of king is quantitative easing, which is where the government or the Bank of England buys bonds. So this on the right-hand side effectively is the gilt curve. So these are government bonds. And over the left-hand side is the Bank of England base rate, either bit that me and you hear about. But they can use this quantitative easing to basically push down the cost of borrowing over long term. So again, they probably use that rather than interest rates. They can mess around with quantitative easing, and me and you almost don't notice. You probably would notice an interest rate change to some degree. So are interest rates going to change much? It's not that likely. Are they going to mess around with quantitative easing to help that? Probably. But inflation is different to us all. So we've all got different levels of inflation. So even if the government and the Bank of England think 2%, that will do, that's all right. Ours could well be higher, it could be lower. In terms of investments, you may have heard of this style of value. So this is where companies are in theory cheaper and there's an expectation that they'll rise in value, or there's growth, which is more like your Googles and Teslas and that sort of stuff. These two, the black line or the dark grey line is growth. So that did really well last year because everyone jumped on the tech bandwagon pretty much. Value suffered, but then it's had a bit of a flip into this year. So don't just think investing is one style. There's lots of styles. And this graph, don't worry about reading it. But again, the point is, what sort of investment selections are you going to make? Investing is not a thing. It's a whole range of approaches. So just because you're invested in stocks and shares could be you're invested in anything. So this is just trying to highlight that if you're invested, it could be doing all sorts, just depends what you're invested in. ESG, so environmental, social and governance. I don't know who's a football fan around this virtual room, but the European Super League caught the headlines recently-ish. And the real key there was that the social aspect and the governance were in big highlights of what failed with that. Obviously less on the environmental side there, perhaps, but you know, the kind of governing bodies and teams did not think about the social aspect, but it's driven by the poor governance, in my view, and share you whatever you think about it. But you know, this ESG often grabs headlines for the environmental side, but social and governance are really, really important. And I think we're starting to see that grow over time. And if you are ever looking at investing in companies, look at their governance structures, look at their structures. How are they paying themselves? How are they remunerating the board? So I'd like to think that the social and governance aspects will to some degree grab the headlines more than just the environment, which is clearly very important. But the European Super League, was a really interesting and perhaps more kind of not relevant, but almost easier to kind of comprehend in terms of the social and governance aspects, which just really failed. But thank you, Paul. But the financial aspect of the European Super League was the real driver for the teams. So again, financial investors can really have a difference, and that was just one example. So what the risk is really not meeting your objectives. What is your objective? What is your aspiration as a family, as an individual? What do you want to do? And if you don't meet that objective, that's the risk. It's not whether you have enough money, it's what is your aspiration, what is your objective. So really concentrate on, over time, growing your wealth. And that is not leaving it all in cash. It is not betting on Bitcoin. Feel free to buy a bit if you want. I don't care, whatever. I will not advise it, and we don't. But you know, you can throw a bit of money at it. You can throw a bit of money at Tesla if you want, but don't just go for all in one basket. It's the whatever cliche, just the usual stuff, but it's worth reiterating. Do the basics. And these are, just so you are aware, these are the sort of returns that we are trying to target, obviously in excess if we can, but these aren't mind-blowing numbers. It's not like it's going to make you a millionaire overnight, but over time they will compound, and we're trying to do it over time. So don't leave it till you're 60. If you want to retire at 61, get on it, and ideally get investing without being afraid of losing money. Think about it as I might not get to my objective over the long term. So that was it. I think I'm probably under time, which is slightly unusual, but there you go. So Q&A, and there you go. I'll stop sharing.
Okay, fantastic. Thanks, Neil.
It wasn't a like a learning thing. It was more about just trying to get people thinking, I think, and take a bit of appreciation of what they're maybe not focusing on, rather than hopefully taking anything away in the learning sense.
Okay, thanks. Any questions? No. Yeah, Margot.
Yeah, what do you think of environmentally friendly investments? Because there's quite. I went on your workshop and you mentioned difficulty with greenwashing.
Yeah, and I was talking to Jackie Sherman about it this week as well, because I think she's got this green business network, and they, I guess, taking a bit of a lead on trying to promote that side, not necessarily investing. But so I suppose as a general answer, it's ever growing in importance, but we're admittedly led by what people are after and what they ask us about and what they want. So we have investments that we select for clients that say renewable energies, for example, wind farms. Greencoat Wind is a fund that we invest in for clients, for example. It's entirely UK wind farm based. It gives kind of consistent dividends and growth over time. So we have some, and we have some clients, I think we've probably got two, that have come to us and said, I really want to focus on that side. And we have a few on our list that we invest for that person or those people. But for 99% of our clients, it's if there's an option A and an option B, and option B is better, has a better environmental credential, we'll go for that because it just makes sense. But if it's just option A and that does the right thing as an investment, then we go with A at the moment. So, and to your point, Margot, it's also difficult. If someone says, I want to be green investor, well, what does that mean? So it's a bit of a minefield. That greenwashing can almost apply to personal views about what it means, as much as the industry try and say, oh, we're really green. Well, are you? And what are you doing? And I think when you were on there, we talked about, trying to research into what the companies are really doing and funds. Are they actually doing it? Have they actually got any wind farms, or is it just a photo they've nicked off Google Images, or,
Are they regulated? I mean, is there anybody checking out to make sure that they are as environmental as they say they are?
I don't actually know. I mean, they'll be regulated from an FCA regulatory perspective, but are they being regulated on doing the thing? Not sure.
Well, because if they're luring people in, because they're saying they're really environmental and they're not, that's dishonest.
It's those Marcuses, Margot.
Yeah, I mean, I guess it's, like I said, with the ones we've got, it is based on investment performance, but also the research that we and people we use give us confidence that they're doing what they say. But have we been out to see the wind turbine? No. But you kind of, it's to a degree you do some research and then you kind of putting faith that they're actually doing it. But I'm not sure and that might be another issue. How do you regulate that? I don't know. But it's definitely a hot topic. It's just for us not, is it worth hot enough, which is a real shame, because we got solar panels and an electric car and we do what we can personally. But in terms of if the investment world got really behind it, I'd love to see that it would dramatically change things, hopefully for the better, not night and day, but if you took trillions of money behind something, it will change. But it needs more sentiment and more momentum.
Fantastic. Thank you very much. I will just say that I did the workshop as well with me and Rob, and it was really, really interesting. Are you doing another one?
I think we're doing them again. I think quarterly. I think.
Yeah, they are well worth going on. They are very interesting. So yes,
trying to deliver, get people thinking. It's not, you might learn something, but equally, it just make you think about what you're doing.
Yeah, I think I liked about the workshop. It was at sort of quite a basic level, really, wasn't it? Because I think sometimes when people look at it, I think, well, I don't know where I would start, to be honest with you. Yeah, and it does start at quite a sort of basic level. So
And that's the tricky thing. I guess it's like with everyone here. Everyone's got a base level of some sort in all of our fields, and it's where they feel comfortable starting and getting involved. Others are already there and doing it. So yeah, it's quite difficult to pitch, but
fantastic. Thank you very much. Okie dokie. Right, breakout room time. So I've paired you all up with someone else for 10 minutes. Neil, stay where you are. You've drawn the short straw and you're with me. That's Stephen Mather's fault. You should have been with Stephen Mather, but you got me instead. You don't need to comment on that, but I'll leave it to your own thoughts. Okay, so off you go, and I shall see you all in 10 minutes. Are you going? Is it there? Oh, yeah. Going.
Oh, I think I can see your little view of who's gone.
Can you?
Yeah.
There we go.
Yeah.
Everyone's gone. I'll just start the timer. It should cut off after 10 minutes. It normally does.
Yeah.
It's not worked. So everything all right with you then?
I'm seeing Stephen later. We're going to, I don't know how well you know near Foss Park, but there's Everard's used to have a big brewery site.
Yes.
And that was knocked down, and they've built I don't know what it's called, but I think it might be a brewing room or something, but basically it's a brand new site that they've built, and it's almost like a modern brewery. I mean, I've got in my head like a brew doggy kind of quite modern beer hall, but it's also, I think they do food and stuff like that.
Right. Okay. Well, that'd be nice.
We're going there this afternoon as an early afternoon, and Stephen's meant to be joining us.
Well, okay. Well, hopefully you will. Yeah, I remember that Foss Park before it was built, because it used to be a big Oliver Shoes factory where Foss Park was.
Was that? Okay.
Yeah, because my dad's business, they used to repair the vacuum cleaners for them.
Okay.
About once a week, we have to go down in the van to Oliver's Shoes, and they bring all these vacuum cleaners out, which we chuck in the back of the van, take back to the workshop up the road, and then mend them and bring them back.
Oh, okay.
I always remember my dad saying, I wish I could have bought like a 10-metre square in the middle of Foss Park. Because he said you'd have got an absolute fortune for it, no doubt.